value from success, growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen from the TechnicalTraders.com. Welcome back to the show, Chris.
Hey, thanks for having me, Jim.
And Chris, you're having to dig out where you are in Ontario?
We are. We got about 4 feet of snow here. It's just a huge dump. I went out with the kids yesterday. We went up on the mountain, and you're swimming through the snow, and you fall down. You almost can't get back up, and you almost suffocate from this fluffy, fluffy snow if you inhale it. It is wild. I haven't seen snow like this in 20 years.
And when you get that much, you can't even go skiing.
Yeah, exactly. Well, the ski hill's open tomorrow. Thank God there's going to be a lift of the ban right now. So tomorrow the ski hill's open. It's going to be pretty big for our town because we are a ski town. And, it's so deep you wouldn't even be able to really get going. The hills aren't steep enough here. We call them mountains, but they're more or less rollers if you're from anywhere where there's real mountains.
Yeah, bunny hills here in BC.
Yeah.
Chris, how are energy and battery metals doing right now?
Yeah, well, we look at the energy sector. I mean, we've seen crude oil has been just on this tear. It's actually almost up to this $62 target that I've had for about a month and a half, 2 months here. I think we just continue to see money pile into the energy sector. In terms of, I think oil is people looking at the future economy coming back to life, so that's why people are moving into oil. When we look at natural gas, it's up, almost 8% this week, today alone, and that's because I think we got this massive cold front going across North America, and we're seeing huge power outages down south, even I think in the southern states just can't handle the cold, and they got power outages. So we're seeing the energy sector really kind of pick up speed and to the upside, and we're seeing energy stocks rally. And really, I think a lot of it is just it's been so oversold that it's just kind of having this rebound. And now that it's kind of picked up enough momentum, a lot of people are chasing the energy sector to the upside and driving prices up, especially the oil explorer stocks. They're really on fire. So I like the energy sector, but I do feel like it's getting a little long in the teeth. It's coming to resistance. Everything, oil's hitting resistance. The stocks are hitting resistance levels. So I think they've kind of had the majority of their run already.
You said nobody is interested in defensive stocks right now.
Mm-hmm. So if you were to look at all the different sectors and how they rank, which ones are performing the best and the worst, I use a strategy called the band trading strategy, which stands for best asset now. And the system sorts out the sectors, and the bottom sectors are gold miners, consumer staple sector, the utility sector, and bonds. And those are all very defensive plays. When people get worried, they tend to want to move into some gold miners. They tend to move into the consumer staples, buying companies that supply stuff we need no matter what happens. Same with utilities. But they're the bottom of the barrel. They're in downtrends. There's been selling going on. They're just not getting any traction or love. And then we look at the bond market. The bond market is in free fall mode the last couple trading sessions. Just no one wants bonds. They're not worried about any downside correction. And they think the market's, they're loading up with stocks. And we're seeing the options market. I think it pretty much doubled in 2020 or in the past 12 months. Everyone is buying call options. So they're leveraging themselves on these, these tech companies, small cap companies, and buying lots of leverage. And everyone's running in one direction, screaming and having a blast right now. But when that happens and we're at these extremes we're seeing, you've got to start to worry that, okay, the music's going to end and no one is really protected for a downside move because everyone's just buying call options in these small cap stocks, which you can't argue. We're in a strong uptrend. But it's so extreme right now that the markets are screaming to me that there's going to be a very sharp correction. It's going to be fast and sharp, and it's going to hurt a lot of people. So people need to be aware of that.
We'll have more with Chris Vermeulen right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, have you seen the market like this before where people are absolutely fearless to get into, it seems, what most people would be consider risky stocks?
Yeah, I mean, we have. I mean, we saw this back in late 2017 or early 2018. It was very similar type of move in the stock market. Everyone was just piling in. Prices just kept going up and up, the stock market hitting all-time highs. We saw something very similar to that in 2019 as we kind of ran into 2020 and continued that extended move, which the COVID crash eventually totally cleansed the market there. So we've seen this happen time and time again. I like to watch the put-call ratio and see how many people are buying calls to puts on the market. And when people are all buying calls, that means they're leveraged to the upside. They're only expecting the prices to go higher. And so we're seeing that again. And that is a sign that you need to be really concerned that when the market does reverse, it's probably going to be very quick. It'll be one of those 5 or 6 day market corrections. The stock market could fall, 5 to 10% very quickly. And if you don't have proper position management and trailing stops in place, you can get hurt really quickly, especially if you're using leverage. And this is just a time in the market where you just need to be extra sensitive with your positions and manage them because you do want to be long. We're in a very strong bull market. We're long sectors right now. We're making lots of money. This is really exciting times, but you just need to be tightening up a trailing stop. So if the market does just start to crash 1 day or 2 days in a row, it'll hit your protective stop and you get stopped out before it turns into a negative trade. So it comes down to active trading when you're in this type of market environment.
How important is it to have an exit strategy even in good times?
It's position management really is the heart of trading. If you can't manage a position, you don't know where to get out. On the losing side, you don't know where to take partial profits. It really is the game changer. If you don't know how to manage risk in positions, you're going to fail as a trader. As a shorter term trader, 95% of people fail. They either never make money or they lose money. And it's just the stats. Trading is an extremely difficult business to be in if you don't understand risk. And it always comes down to how you manage your positions. And the biggest thing is, there's 3 ways I look at trading and managing risk is your position size. If you have too big of a position, if that trade takes a loss, it's going to do a lot of damage to your trading account. Now, if you get too small of a position, then you're never going to outperform the stock market. So there's a fine line between how big of a position you need to take depending on that overall trade and the risk, the volatility of it. The second is the way to have consistent gains is to be scaling out when you're hitting profit targets. So when the market rallies up, we like to take partial profits at 7%. We take some more at 15%. We take more at 20%. And then we leave a runner in case that sector ETF continues to keep running, then we're still in it, but the trailing stop is following it up. So as that rockets higher, our stop is moving up underneath it every day, and then eventually at some point it's going to have a very sharp correction, and as it's coming down, it triggers our stop. And so that it's really important to do that. You need to be scaling out of trades for consistent gains because you never know if a sector or index is going to move 7% and then fall and roll over and sell off in a big way, or if it's going to go up, 60, 80, 100% and keep running. So your strategy has to incorporate short-term gains in case it's a short-lived move, but it also has to incorporate a strategy that allows you to have a runner in there in case it just keeps on going, that you're still in it and you can make those gains. So it's critical. A lot of people don't understand position management. They don't take the time to figure out proper position sizing, which only takes a couple minutes at most. And it's the most critical part of trading that is really skipped out on.
We'll have more with Chris Vermeulen right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, what's going on with the U.S. dollar?
Yeah, the U.S. dollar is it's trying to put in a bottom, but in the last 5 trading sessions, it's really kind of traded sideways in a very tight little range. There is some pretty big swings going on in currencies this week. We're seeing the yen really take a big plunge. We're seeing some big intraday whipsaws today, being Tuesday in the market. So overall, I think the U.S. dollar is trying to roll over here and move lower, which is going to be great for some sectors, commodities more specifically, like gold and silver and miners. But overall, the dollar right now, it's in a pretty big decline, and it's just kind of started a bounce that could last another month or two trading sideways. So I'm not expecting too much out of the U.S. dollar. I think it's going to continue to chop around sideways in a range between 90 and 92 on the Dixie chart, and ping pong around. But eventually, when it breaks either to the upside above 92, that could be very significant in terms of precious metals actually having a deeper correction. But if it breaks below 90, I think that's going to start a spark in the precious metals sector, and we could really start to see those take off, because I think that's a critical level on the dollar, that once it breaks 90, I think it's going to start another extended multi-month sell-off where that is going to trigger the rally of precious metals.
Has Bitcoin and other cryptos siphoned off money that traditionally would have gone to gold and silver?
Yeah, I think it has. I mean, I know a lot of my followers are heavy into precious metals, and they're all very heavy into digital currencies now. And so it's definitely taken some of the spotlight. Obviously, Bitcoin's had such a huge run. It's got tons of volatility, wild intraday swings. It's naturally drawing the really speculative traders to that market. So whatever's shining the most is where you tend to see the aggressive traders go. And I think precious metals traders are very aggressive because it's a very volatile asset group of stocks to be trading. And Bitcoin has had that spotlight, and it's performing much better than precious metals. So it's definitely siphoned off a lot of money. It's got a lot of attention. It's got a lot of attention of just normal stock traders in general. I mean, it's been such a huge mover. You know, this recent rally up to 50,000, over the last 2 weeks, it has a pattern that is pointing to 60,000 as the next upside move, and it looks like, it's starting to break out and start that run again. So it's just on fire. It's kind of doing one big bull flag after another, takes a little pause, and then has another shoot to the upside and takes a little pause. So it's pretty wild. Like, where is it going to end? $100,000 Bitcoin? I mean, it's not out of the equation, but it's definitely a fast mover.
Chris, anything else you wanted to touch on today?
There's if you take a look at the jet sector ETF, which is JETS, it's one that's kind of been forming what looks to be a big cup and handle formation. And I mean, they got beat up really hard during the COVID crash. We saw the jet sector ETF fall roughly 63%, and it's been forming a really nice pattern. I talked about it just the other day, that if it can break above $24 a share, which is trading at $24 today, I think we could see a really significant run up to $28 or to $30 a share. And I think this sector's starting to come back to life. We're starting to hear about restrictions easing. Airlines are starting to gobble up the weaker airlines, so there's some condensing going on in the sector. So it's a big overhaul, revamp kind of going in that sector, which I think is going to be very good for the airline stocks going forward. So I like this sector. It's got a bullish chart pattern. It's kind of one I haven't heard anybody talk about in a little while, so it's definitely something to keep your eyes on.
Any signs of the Robin Hooders taking another run at the hedge funds?
I don't know. I don't follow it too closely. I think it's done a lot of damage to a lot of small traders. The way that the stocks move when everyone piles in and how they gap up, most people get filled at the top. And you look at GME, it's down like 65 or 85%, and AMC down 70% or something like that. And the pops happen only in 1 or 2 days, and most people end up getting a bad fill, and then it crashes. So I'm not sure how big of a move if that's going to happen. I mean, I know there's going to be more stocks mentioned, and they're going to push into them. They did the same with the MJ, or the marijuana sector stocks had a big surge from them, and it did the same thing where it opened up higher, what I call as a blow-off top or an exhaustion move, where it hits mainstream media and everybody puts their orders in, and they get filled the next day at this ridiculous price, 20 or 30% above the previous day's close, and then from there it just crashes. And so it does a lot of damage to a lot of small traders. And the way I see it, I think the big hedge funds actually are. It sounds bad, but I think the hedge funds are probably loving what's going on. The majority of hedge funds, they see these stocks surging on news, and if you've been trading long enough, when there's a big, almost like a pump of something, where something gets pumped up, just like penny stocks used to get pumped and dumped, they used to say. I mean, it's the same thing that's happening with these. It gets pumped up, it spikes up, and then it crashes. I actually feel like the hedge funds are probably making a fortune. They're being dead silent about this because they're probably making a fortune off these giant spikes and then crashes, right? So it's really hard to beat Wall Street. I mean, they got the inside scoop. They've also got the experience. I love how Wall Street kind of got their head handed to them there with GME, and it can hurt some people. I mean, it's nice to see the little guys be able to get back to them, but the problem is the big players typically are still going to win in the end. They know how to take advantage of this. They can get the positions in, and so I have very mixed feelings on it. It's great to see everyone try to, beat up on Wall Street a bit, but on the flip side, I think the big players are actually making more money than they could have imagined off this type of play.
Chris, thank you so much for chatting with us.
Hey, thanks, Jim. Always a pleasure.
My guest has been Chris Vermeulen from thetechnicaltraders.com. If you have any questions for Chris or any of our other guests, you can send them to info@howstreet.com. Find us on Twitter @HowStreet, our YouTube channel, Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.